And this is Jay Woods, Chief Market Strategist of Freedom Capital Markets, and you're watching Taking Stock.
Two minutes to go into the close, and for the third consecutive session here on Wall Street, the major market indexes will finish in positive territory. This coming after those four consecutive sessions of profit taking. Not quite at all-time highs for the major market indexes, but pretty close here on the first day of this shortened holiday trading week here on Wall Street. Financials, industrials, and discretionary, those are your strongest performing sectors in the S&P 500 today, with losses to the downside being led by staples, utilities, and real estate. That and so much more sets the stage for the show, and welcome to it. You're watching Taking Stock. I'm your host, JD Durkin, just moments away from the ringing of the iconic closing bell, my friends, here at the big board, the New York Stock Exchange. Today, the team from Global X ETF set to do the honors. They will ring the bell and will also be on the broadcast, as will the truly great Einstein of Wall Street, the one and only Peter Tuchman, your favorite guest we have on the show. He joins us right after the bell on deck to get his take on today's price action, advances to declines, overall breadth, and so much more. Metals, gold and silver, both reaching fresh all-time highs on the session today. Oil benchmarks, WTI and Brent crude, both in positive territory as well. The crypto majors are down on the day. We'll talk a lot more about Bitcoin's price action, trading back down to an 88 handle. We'll talk about the Dow, other sectors catching a bid after the bell, as well as the state of breadth and advance to declines. Peter Tuchman joins us in just a moment. The crowd is ready to go here at the big board. Global X, time now to do the honors. I gotta say, swinging that gavel is the coolest looking thing down here. It looks like so much fun. Final tail of the tape for this Monday, December 22nd. The S&P 500 will finish up 0.6%. The Dow 30 up, let's call it 0.5%. The NYSE Composite Index, a strong showing, up 0.8. And the small caps in on the action. The Russell 2000 up 1.2%. Also catching a bid on the day, the airline stocks, the big financials, and bank stocks having a strong day, led by Citigroup. Oil and energy stocks, and the fintech giants, led by Affirm, up 3% on the day. Advance to declines on this Monday here on Wall Street, showing us strong positive breadth overall across the tape. Nearly 2 advancers for every 1 decliner. More than 140 NYSE listed names reaching a fresh 52-week high here today on this trading Monday. Let's say hello to the man himself, the institution inside the institution, the one and only Peter Tuchman of TradeMoss here at the NYSE. Thanks for being here as always.
Always a pleasure.
It's a short holiday week.
Yeah.
We don't have a lot of earnings. We don't have a lot of data. We don't have a lot of volume overall, but what are you seeing on a day like today?
But you just described it. I mean, it's a spectacular day. With all of that lacking, right, which would normally be the catalyst to make the market go up or down on its own. You know, the market sort of is kind of, I don't think it's been trying to find its footing, but it's been trying to find what's going to be the next catalyst. And it almost didn't need anything. You know, it just sort of, it was like fresh money coming into the market, gold and silver hitting record highs. That was spectacular. That kind of, you know, even though that normally is a hedge against the market, and usually it goes up when these things go down, it's just like everybody's just sort of buying. The confidence is back. We do have those entries, you know, we are in the midst of an interest rate cutting cycle. You know, we do know that we're going to get a new chairman who's going to be definitely more dovish, right, as you know, as per El Presidente's, you know, demand, and that's good, right? At the end of the day, higher rates for longer, you know, don't do anybody any good. And so you're coming into the end of the year. It's now sort of, you know, people are sort of, I guess, looking back over the last couple of weeks, they're looking at the spectacular Thanksgiving numbers on retail. That was solid, and across the board, you know, we're hitting record highs in so many things. Look, if the market closed the year today, it would have been a great year. We've had more than 48 record closes across the board. You said it, small cap, mid cap is super solid and good strength. The tech is back in play again. And so this, I mean, you can't say this is fresh money, but it just feels like the people are sort of positioning themselves, you know, into a great end of year.
This can be the time of year we see some window dressing. That happens. We see some tax loss harvesting. Low volume overall. We don't get a lot of those big catalysts in the final trading days of the calendar year like we have right now. What are you going to be looking for in the next couple weeks, the last weeks of 2025?
So just kind of what you just said, you know, whether it's, sure, I would say there's probably profit taking than window dressing, and I think that's what we've seen the last couple of days. We had a massive S&P rebound on Friday, but it was non-directional. It's kind of curious. Those imbalances tend to be their trillion-dollar trades. It was the fourth biggest in history, and net it's a flat trade because for every one there is to buy, they're going to be selling one. But normally they're very directional. This was not. It was literally across the board. We traded 3.8 billion shares on Friday, and it was literally the advanced declines were straight down the middle. That was extraordinary. So I'm seeing rotation. I'm seeing some profit taking with a little bit of window dressing as well. I'm seeing tax harvesting, and I'm just seeing a little bit of fresh money come into the market. At this point, you know what? People are sort of comfortable that the year end is going to be solid. I think we're now going to try and get to the levels that we were hoping for, because the last couple of weeks have been a little anemic with a little, it was a slightly, you don't coast downhill. I mean, you do coast downhill. It was not an aggressive way. But the way you saw it today, 2-to-1 advances versus declines, it was a solid day across the board. Nothing but green on the screen.
I got less than a minute left. Santa Claus coming to town, maybe. Final
Absolutely.
5 trading days of the year, first 2 of the new year. That kicks off Christmas Eve. What do you think?
I completely. I'm a big fan of Santa. I know Santa.
You do know
I've known
Santa.
him for 35 years, and he did give me a little wink in my ear that he is coming to town. Look, I printed up my S&P 7,000 hats and my Dow 50,000 hats. Whether we get there or not, I would love to see that happen. A big 7 in front of the S&P would be extraordinary. We are inching towards there. Surely above 49,000 on the S&P, on the Dow would be wonderful to close out the year. My gut is we're going to close them out right at the high.
Imagine having this conversation on Monday, April 7th, the lows of the Liberation Day. You and I were down here, and it felt like such catastrophe in the moment, and here we are on the doorstep of 7,000.
And there is nothing catastrophic happening right now, and the door is closed for catastrophe.
Thank
coming
goodness.
into the end of the year.
Thank goodness.
Although we are a tweet away from Crazy Town, remember that.
That's true.
So you never know.
A post on social media could rapidly change the narrative just as quickly.
It surely can, but I think we're confident now that the runway is clear, and I think we're off to the races.
Peter Tuchman of Trade Moss, the institution inside the great New York Stock Exchange institution. My man, thank you for being here as always. What a pleasure to have you.
Boom.
Josh will grab your microphone.
Yes,
Jeff,
sir.
you and I are going to head
Thanks,
this way and go for a walk. Look at this, right down Broadway. The path is clear for me here on the broadcast. We'll now bring in the latest event contracts for a closely watched contract over on Polymarket, as Polymarket participants are trying to figure out what will be, I love this one, the #1 song streaming on Spotify this Christmas week. 1% chance on Polymarket. It is Brenda Lee's Rockin' Around the Christmas Tree, a Home Alone classic. 34% chance it is Mariah Carey, All I Want for Christmas. Feels low to me, but participants are really bullish on Wham's Last Christmas, 67%. Kind of a depressing song, with all due respect, in my personal opinion. The market will resolve based on Spotify's weekly info, which gets released on Friday, and we will see what happens. Jeff, time before we go to break for 2 NYSE notables. How about Constellation Brands, Modelo and Corona, one of the best performers in the S&P 500 on this Monday. Did get a downgrade from analysts at Jefferies last week. Investors shaking that off. The stock today trading back above the 50-day moving average, but shares of Constellation still down 36% from the start of the year. And finally, a look at one of the retail giants, Target, having a tough time as of late, down almost 3% on the day, one of the worst performers in the S&P. It did have that big pre-Thanksgiving rally wrapped around Black Friday, where we saw shares of Target surge 22% in only 4 weeks, but shares of TGT are down 30% from the start of 2025. FinTech TV's very own Rachel Pether sat down with Ron Botkin. Ron is the CEO and co-founder of Theric Labs at Solana Breakpoint in Abu Dhabi. Take a look.
Hi everyone, we're here at Solana Breakpoint in Abu Dhabi, and I'm joined right now by Ron Botkin, who's the co-founder and CEO of Theric Labs. Ron, thanks so much for joining us today.
Great to be here, Rachel.
So why don't we start with a little bit of what? Tell me a bit more about Theric. What is
So Theric is an AI agent protocol and technologies really to power the agentic economy, right? So we started the project almost 4 years ago, always with the mission of integrating AI and Web3. We felt that incredibly important. Like, I'd been at places like Google and seen how much power there was in AI, where I was in the CTO office working on applied AI and responsible AI, but also how important it is that we not have a few monopolists control our AI future, right? So we wanted to build for a future where we could have, many of us could create and own our own agents and have them work well, right? With the right kind of governance. So we've been working on that broadly the last 4 years. been building out the Theoric protocol for the last 2 years, where we really are making it so agents can work together to coordinate. And this year we kind of got feedback from last year's testnet of how much people wanted to apply agents in DeFi and how much value there was in automating DeFi actions and driving good results. So we'll talk more about that, some of the technologies we've built.
Yeah. And so, because people have been saying, oh, this convergence of DeFi and AI, it's going to be a absolute game changer. Where do you think we are sort of in that cycle? Like you mentioned just with the testnet, like, are we just starting to see what some of the benefits could be?
Yeah, I mean, I think, a really good way of looking at it is there's been benchmarking from organizations like Meter that show what kind of tasks agents can achieve, right? And so, just each year, we're seeing the power of AI agents, the kind of tasks they can achieve, go up about 4 times, right? So, like, it takes what a human could do in a minute at the start of the year is now almost 5 minutes, right? And so that's really getting a lot more powerful. And so what we're seeing is the level of automation and sophistication you can achieve in DeFi is really hitting that inflection point where it's starting to be useful for more and more sophisticated tasks, right? So like doing things like risk analytics, being able to automate playbooks, being able to evaluate and make real-time decisions, influence the right kind of risk parameters for trading protocols, right? These are the kinds of things that we're seeing AI agents working at really well. Now, we think it's important though that in that you still have security with guardrails, right? So putting agents in vaults, not just like turning them loose. Defense in depth, don't share secrets with agents that someone could jailbreak. And also, really good risk management, including benchmarking and evaluation to make sure that what your agent is doing is going to perform well as best you can, rather than, a lot of people are saying, hey, like, YOLO, I'm just going to prompt my favorite chat bot and have it tell me what to do. And, that might work for you, but there's a lot of risk.
Yeah. And so what does that integration actually look like? And so tell me what's next for you guys. You mentioned you've just had the testnet. What does that rollout look like?
Yeah, so we just launched Alpha Vault, which is a first agent curated vault. It's focusing on ETH, right? So we have an allocator agent that is constantly looking at different high value sub vaults that apply different strategies for earning ETH, for compounding ETH, and does risk adjustment allocation across different buckets, right? So that's the first thing. We're developing an alpha agent that is doing a hedge liquidity provisioning. So using hyperliquid perpetuals to provide ETH exposure and constantly figuring out how to adjust positions in liquidity pools to farm the yield. Observing like, when is it too risky so I can pull out and avoid losing, right? So like in back testing October 10th, we saw that the strategy actually had gained about 1%, which is a great annualized return in ETH terms, right? Obviously ETH sank, so the value of ETH went down, but in ETH terms it went up, right? Which is the idea of an ETH stat, right? So we launched that just about a week ago, right? We're already at about 25 million in TVL. And the next step, we're looking ahead next week to launching our mainnet, right? Which is the underlying alpha protocol to let you have agents communicate and register, and add staking is where we're going to have staking be a way that the community can start to delegate to agents in the next step. So they can say, hey, this is a high quality agent, as a strong signal for reputation to say, hey, this is an agent that I could trust to allocate funds and manage a vault.
That's been such a fascinating conversation. Thanks so much. I love this individual democratized approach to AI and crypto. It's been fantastic. So thanks so much for coming on.
Thank you. It's been great to be here, Rachel.
Welcome back to the show. You're watching Taking Stock, still live from the trading floor of the New York Stock Exchange. Time now for the latest headlines in the worlds of crypto, fintech, and AI that you need to know for your trading Monday. First up, the crypto majors are down somewhat fractionally. At least that's the story for Bitcoin and Ethereum. Solana down, however, on the session 2%. Next up at this hour, crypto theft hitting a record $3.4 billion in 2025. Chainalysis saying North Korea-linked hackers have been responsible for more than half of those losses, underscoring a sharp rise in the scale of attacks this year. And finally, White House crypto czar David Sacks saying the Clarity Act at long last is close to passing, at least according to him. This will give the CFTC more authority over digital assets and put new chairman Mike Selig at the center of U.S. crypto policy. Scott Helfstein joins the show now, just rang the closing bell here at the New York Stock Exchange. He is the head of investment strategy at Global X ETFs. Huge fan of your basket of ETF products and the whole team at Global X. Thanks for being here.
Thanks for having us, JD.
Of course, first, what was it like for you and the team to ring the closing bell after such an incredible year for the general conversation and evolving narrative of ETFs?
We had a great time up there. It's been a great year for us. We crossed 75 billion. We're here to celebrate Shield, which is our defense tech fund, which is up over 70% this year, and it's one of the fastest thematic funds to go to above $4 billion in the course of less than 2 years.
So I'd imagine that you largely launch a fund, a product like that because of investor appetite. How important is it to take in real time the feedback you're seeing from investors who say, hey, maybe you don't right now offer that particular tranche of products, but we want to see something like that on the ETF market?
So it's a really interesting process, right? It starts sort of top down. Where do we think there are evergreen ideas? Extended growth for multiple years, but to your point, we work very closely with clients and we're constantly talking to people in the market about what those gaps are in their portfolio. And we pride ourselves on being innovative, being efficient to market, and really that's, I think, why clients continue to talk to us.
Yeah, you and I were talking before we came back live for the show. I was a little surprised to hear some of the best performing ETFs, overall themes and sectors that investors have been gravitating towards. What have the numbers so far here in 2025 told you?
So people are very interested in the AI ecosystem. To us, that is not just one or two companies. Our AI fund is a basket of 80 stocks. We also, though, think about, again, the ecosystem. Data centers have a dedicated fund there, robotics, cybersecurity to protect it. But then, of course, you've got the energy needs. How are you going to power this? So you have uranium, you have U.S. electrification, you have natural gas and infrastructure. And so there's a lot of different ways to play that. So certainly that's been a space that's gotten a lot of attention. Certainly defense technology, given what's going on in the world. And as you were saying a few minutes ago, the commodity space, whether it's copper miners, whether it's silver miners, have also been red hot this year.
2025 was the year, correct me if I'm wrong, that officially we have more ETFs than underlying publicly traded companies. How did that happen, and what does that tell you about appetite in these ETF products?
So the appetite is ravenous, and we crossed over 4,500. We're actually on our way pushing towards 5,000 ETF products so far out in the marketplace. And a lot of it is around innovation. There's a lot of Me Too products, and so that's why what really drives investor attention is people who are bringing out things that are either new or things that are cost effective. And that's what at Global X we're going to continue to try and do.
How about precious metal related ETF? What have you seen in terms of investor appetite for those particular type of products? And obviously, we kick off the broadcast every day, as we just did a few minutes ago. New all-time highs yet again today for gold and for silver.
Yeah, it really was in the beginning of the year, and I think into April, a bit of a sea change for investors when central banks around the world started reducing some of their dollar exposure and moving over to gold, and that triggered kind of a wave, if you will, of interest. If you look at gold inflation-adjusted prices, they are well beyond the 70-year range that they have generally been. Silver the same way. And so the question, I think, for investors is this a new sea change in how people want to allocate beyond just stocks and bonds and opening up some asset classes that perhaps only a few used to play in?
Before I let you go, your outlook for 2026 for the broader space.
Yeah, so across the market, we're optimistic. A combination of strong earnings growth, plus we think the Fed is really still more dovish, so 2 to 3 cuts. That in and of itself could lift the market meaningfully, call it 10, 12, 15%. More broadly, though, we look below the headlines, I would say, than the indexes. So we're still interested in the AI ecosystem. We're still interested in plays tied to geopolitical challenges, like, for example, U.S. infrastructure. How do you hide from tariffs? U.S. domiciled companies selling to U.S. Into the U.S. market,
sure,
not focused on tariffs. And then where can you get good value? And we still think things like data centers offer that. So we think 2026 is going to be a good year.
Scott Helfstein of Global X ETFs, thanks a lot for being here. Congratulations on a killer year.
Thanks, JD.
Folks, don't go anywhere. Much more Taking Stock coming up after this quick break. Let's do it, folks. Welcome back to the show. You're watching Taking Stock. Time now for the latest headlines you need to know on this Trading Monday in the worlds of startups, raises, and rounds. First up, Bill Ackman proposing taking SpaceX public through his Spark structure. Yes, Spark as opposed to a SPAC. It's a move that would give Tesla shareholders priority access to the IPO and potentially raise tens of billions without a traditional listing. Next up, AI chipmaker Cerebras said to be preparing to file for a U.S. IPO as soon as this week. Yeah, this week during Christmas, targeting a listing next year after clearing regulatory hurdles that derailed the company's earlier plans to do so. And finally, autonomous SRE startup Resolve AI reaching a $1 billion valuation after raising a Series A round led by Lightspeed, which highlights strong demand for AI software and system ops tools. Anthony Georgiadis joins the broadcast now here from the trading floor of the New York Stock Exchange. Anthony is the founder and general partner at Innovating Capital. My man, thanks for being here.
Yeah, thanks for having me.
Great to have you here on a shortened holiday trading week on Wall Street. Talk to me about the current state of the overall investment cycle narrative and conversation, and what do you see as that space continues to evolve and emerge a little bit ahead of 2026?
Definitely. Well, I mean, across asset classes, there's a lot going on. Take digital assets, for example. In 2025, we've seen probably the biggest deleveraging cycle so far in the space. A lot of shorts have obviously been moved in as well, and that's led to what we've seen as some recent contraction. We view it as healthy overall. There's a lot of institutional frameworks that have been set up as well to really pave the next way of inflows. Over the last few months, for example, coming off the hype of a lot of the Bitcoin and Ethereum ETFs, we've seen net inflows actually turn negative to net outflows. So we generally view that as a pretty solid framework for the future of crypto and digital assets into 2026, kind of shaking out and really resetting expectations overall.
Sounds like you view this a little bit more as a healthy garden variety pullback, not like the start of a big scary crypto winter. Is that a fair read on your comments?
There's still a lot of obviously more macro sensitivity. People are obviously hyper focused on what the Fed's doing, interest rate sentiment, how hawkish or how dovish may we be. A lot of economic indicators and signals are looking a little weaker as well. And so generally speaking, what we've seen from the institutional inflows is that crypto still behaves more, honestly, more often than not as a risk on correlated asset. And typically will get thrown out with the bathwater when things really, do turn the other way.
Yeah, we always talk about throwing the baby out with the bathwater during these types of garden variety pullbacks. Are there big catalysts specifically for the crypto majors on your landscape for 2026? We've had this fascinating conversation about trying to figure out correlation as Bitcoin moves up or down, for instance. What other parts of the market does it closely correlate or not correlate to? How do you see that conversation evolving in the new year?
Yeah, absolutely. I mean, there's obviously the commodity-like cryptos like Bitcoin that will continue to, over time, see that correlation break. But for now, still serve a very important fundamental piece to construction, portfolio construction theory. On the flip side, though, for general Web3 companies, there's been a heightened fixation away from speculation and meme coins, but on fundamentals, protocol revenue, things like that, especially with a lot of traditional public players and hedge funds coming in and looking, how do we actually price these tokens? Coming off really the digital asset treasury or DAT cycle as well. There's a ton of momentum moving into some of these DATs that I view as are going to have a lot of staying power. Companies like Pineapple Financial, for example, are actually focused on really bridging tokenization, real-world assets, bringing that on chain, and finding new revenue streams that can actually tie back and orient to the fundamental DAT strategy as well. So I think we'll see much more concentration and a hyper focus on really what is the differentiator in terms of fundamental value, and how does that accrue back to the token holder or equity claimant.
Yeah, it's been a full-time job trying to track the general price movements of the crypto majors here in 2025. So thank you for helping us get smarter together for our investors watching at home. Great to have you here, Anthony. All the best for the holiday season.
Likewise.
Anthony Georgiadis, founder and general partner at Innovating Capital. Folks, we're going to take a quick break. On the other side, we'll bring you the latest from Scarlett Sieber at Money 2020. More Taking Stock coming up after this.
Welcome back. I'm Scarlett Siever with Money 2020, and this is the segment of Hindsight 2020, where small moments make big money moves. Today we're going to be going back to December 3rd, 1992. Picture this: grunge is trending, pagers are peak tech, and Vodafone engineer sends the first ever SMS message. It said, "Merry Christmas." Cute, right? But what it really meant was, "Welcome to the future." That tiny text kicked off a revolution. Suddenly, phones just weren't for calls, they were for conversations. Fast forward, texting becomes the norm. Remember the last time that someone called you besides your parents? Mobile banking takes off, and fintech apps slide into your DMs. Without SMS, would we even have Venmo, Zelle, or two-factor authentication? No, we would not. This was the OG push notification. And let's be real, SMS also gave us the art of texting your crush without sounding desperate. So thank you, Vodafone engineer, for inventing both mobile money and modern dating anxiety. Next time you send a text, remember, it's not just a message, it's a legacy. Until next week, when we talk about an IPO that turned garage dreams into global domination. Back over to you.
You got me here. Let's do it. Welcome back to the show with our remaining 34-ish seconds or so. Get you quickly caught up on what to expect here on Wall Street tomorrow. We do get a final reading on Q3 GDP. Could be a pretty crucial print of data for the Fed to take into consideration for late January's FOMC meeting. We'll also get the latest reading on durable goods. And for fans of the iconic sitcom Seinfeld, tomorrow is, yes, Festivus, the airing of grievances, which thankfully for me, I don't have any because I love my job. That's going to do it for today's edition of Taking Stock here at the New York Stock Exchange. Have a great night, and we will see you again tomorrow. Woo!